Hello, everyone. Welcome to another insightful edition of my latest XAUUSD chart analysis. Since price tested the all-time record high zone around the $2,440 area, as you will see on your screen right now, trading activity has been navigating through a choppy market condition as market participants weigh the options of whether the geopolitical tensions in the Middle East or the resilient US economy will be the driving factor for the price of gold. And as a result of this, price has been caught within this range bound structure. Last week, gold prices faced selling pressure, and the high US core PCE inflation data did not seem to help matters as it reaffirms bets that the Federal Reserve will be keeping interest rate higher for an extended period of time. Now, looking ahead, how will the price of gold fare this coming week, especially in anticipation of a week list with a handful of important US macroeconomic data? As always, we will be leveraging on our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to assess the possible direction of price action this week. But before we proceed, it is crucial to emphasize that this presentation is designed for educational purposes only and should not be considered financial advice. While our goal is to enhance your understanding of price action analysis, it's crucial to acknowledge the inherent risk associated with forex trading. Exercise caution and consider seeking guidance from a qualified financial advisor before making any investment decisions. With that said, let's delve into the analysis. Now, my first point of contact for today's review will be on the daily time frame. Why I had to take a step back to look at what things has been looking like since the beginning of this year. Now, if you look at this closely, it is very obvious that the market has been bullish since the beginning of the year. And in fact, we have a couple of ascending trend line which buttresses the strength of the buyers in this market. So I have the major trend line here, and of course, we have another one right here. However, for this week, this one highlighted in red will be the one we will be using to navigate the current market structure. Now, look at what happened here at the beginning of this month. We saw how price action broke out of that ascending trend line, as you will see here. And later last week, we saw price action drop back into the trend line. And in fact, we saw a little bit of a breakdown of that structure. And since that happened, price action has been trading around that ascending trend line. Now, in addition to the ascending trend line, we will need a key level that will be serving as a yardstick to guide our trading activity for this week. And I was able to identify a psychological price level around the $2,350 area. And if you look at this level closely, you'll see how it has played a significant role in determining the direction of price action in the last 2 to 3 weeks. Now, last week, price action broke down both the key level at the 2,350 and, of course, the ascending trend line. Then we saw price resume by pressure again. But as soon as price tested this area, we saw some selling pressure around that point. And with the way things are looking like right now, you would agree with me that we are at a crucial juncture in the market. We are depending on how market participant reacts to this key level, which beautifully shares a confluence with that ascending trend line will determine what our next line of action will be. Are we going to see continued selling pressure below the 2,350 in an attempt to push price back into that other ascending trend line here, which will be dovetailing to a minimum of about 800 pips to catch here? Or are we going to see price climb back above the ascending trend line to continue the uptrend move? Now, before we go into the lower time frame where we are going to be identifying simple technical setups to guide our decisions for this week, it is important that we keep tabs with the fundamental factors that will be influencing the sentiment in the market. And of course, the anticipation of these events will reflect on the charts around this key level at the beginning of the week. Now, to do this, we will be going into the economic calendar, and by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart. Now, based on the asset we are looking at for this week, we shall be focusing on high impactful event from the United States economic docket. Now, the first impactful event is coming in on Wednesday, that is May 1st, and we have the ADP employment change, which is a monthly economic report that provides an estimate of the change in non-farm private employment in the United States. Then on that same day, we have the ISM manufacturing PMI, a leading economic indicator which measures the health of the manufacturing sector by surveying purchasing managers on various business activities. Then one of the most important highlight for the week is going to be the Fed's interest rate decision, which will be coming up on that same day. And this is the outcome of the Federal Reserve's meeting where they will be deciding whether to change or maintain the current interest rate. However, consensus are still expect that interest rate will remain unchanged and of course remain higher for an extended period of time. So we'll look forward to see what the outcome on that one will be. Then on that same day, we are going to be having an FOMC press conference, an event where the Fed chair will communicate the central bank's monetary policy decisions, economic outlook, and of course, he will be answering questions from the media. Then, fast forward to Friday, May 3rd, we will be looking at the average hourly earnings, which is a labor oriented data, and it represents the average amount earned per hour by private sector employees in the United States. And of course, it's considered to be a crucial labor market indicator. Then simultaneously, we will be looking at the almighty non-farm payroll, which is obviously a key economic indicator that measures the total number of paid US workers, excluding farm, government, and non-profit organization employees. Now, finally, on Friday, we will be looking at the ISM Services PMI, all from the United States, which will be giving us an insight into the measurement of the performance and expectations of the service sector in the United States. So these are the high impactful event we will be looking forward to. There are many, of course, as you will see, and the anticipation of this event obviously will um, have a way of influencing the sentiment in the market, and of course, we shall see it reflect on the chart as price action. Now, talking about price action, let's scale back down into the 4 hours time frame where I do have a simple trading setup to guide our decisions for this week after considering the character of price action in the last 2 weeks. Now, look at what I have here. I have a simple downtrend continuation pattern in the form of a flag pattern, as you will see right here, where we have this consolidation following price testing that $2,290 area, giving us something like this to work with. Theoretically, and from a technical standpoint, a breakdown of the support line will be all we need to join a bearish move to the downside. So we want to see how the market is going to be reacting to the structure at the beginning of the week. How we're going to be seeing the breakdown of the 2,335 to inside selling opportunities, or how we're going to see price action break out of our key level at the 2,350 to insight an uptrend continuation. So this is my view here on the XAUUSD, but trust me, I will be with you in the comment section of this video on Monday morning after monitoring how market participant will be reacting to this current structure during the early hours of the new week to decide what our next line of action will be. If you have found this content helpful and useful in making your independent trading decisions for the upcoming week, I'll really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.